All right, Dylan, you ready?
Let's do this.
All right, first question I have for you is one, just what's your general take so far on Bitcoin futures ETF? It just literally got approved officially, so it's going to start trading at the beginning of next week. What's your feeling on this?
Yeah, I mean it's super bullish in my opinion. I mean I would preface it with saying I would never buy the product, but I think it's really bullish in the sense that it unlocks a lot of potential inflows from like sort of the trapped boomer capital that's out there. There's just so much money in a zero yield, negative yield world, real yield. So the futures ETF, even though it's not spot, even though it's on the CME, it's going to unlock a lot of capital, and the kind of the second order effects of that are really bullish in my opinion.
Got it. And then in terms of when you start to actually look at the Bitcoin futures ETF, I'm assuming you think the spot ETF would be better.
Yeah, and I think one of the like kind of the bullish things about it is that I think the spot ETF is coming, and this is just like kind of the first step or the first domino. Gensler and the SEC has a lot of, I mean, there's a lot of noise out there in the crypto markets in general, and I think they want to kind of set a precedent here with what's okay, what's not. The futures, the CME is very regulated exchange, and some people say it's market leading. I don't believe that at all, in the sense that it's paper traded. It's the legacy hours of trading, but at the same time, there is billions of dollars of capital of open interest on this. So in the Bitcoin futures contract. So in that sense, it's really good. But yeah, physically settled Bitcoin ETF would be far superior, in my opinion.
Got it. And we've got a couple of charts here from you. The first is let's start looking at the actual futures interest itself. We were just talking to Will about some stuff, but you've got a couple of different ways to look at this. So Bitcoin futures aggregated open interest. What exactly does that mean, and what are you seeing here?
Yeah, so this is the total open interest on the Bitcoin's futures CME, like on the CME exchange. So it's at all-time highs. And basically what it means is just that the total amount of like directional betting on the CME has hit all-time highs. So this for me, when I was looking at these charts last week, the basis, which kind of blew out, which we'll go over in a few minutes, that was kind of one of the leading indicators that, hey, like something's happening under the surface here. And it maybe smart money or some insider trading was front running this move. I don't know if that's insider so much as just kind of front running the news. But yeah, open interest at all-time highs in the CME. That just kind of shows you that there's a lot of demand here, and I think people are trying to front run the coming ETF demand for the futures.
Got it. And so when you actually go ahead and you look at this second chart that you have here, you've got this annualized rolling 1 month basis. What is this?
Yeah, so basically what this means is like, so for any commodity, when you hear like a futures, what that means is that it's easier to think of it not maybe in Bitcoin, but like say oil or any traditional commodity, right? There's a futures market, so you can buy the commodity today, but also you can buy the commodity in February of 2023, and there's a market for that, and there's a price for that. So with Bitcoin, it's the same thing. There's a futures price, and so what this basis is essentially it's the difference between the spot price today and the futures price tomorrow, or next month or next year, but it's annualized. So when the basis says 20%, annualized, that means that if you sell the futures contract and buy spot on an annualized basis, you can get 20% yields, which is really significant in like a zero interest rate environment. That's one of the most bullish things about this is that you're going to have a way, especially if there's somewhat of a better spot vehicle that comes to market for traders, for Wall Street, for legacy capital to come in and capture 20% yields when they can't get when bond yields are negative in real terms. You're buying a junk bond at 5% with inflation at 6%, right? Like that doesn't make sense. So, a lot of people, even if they're agnostic to crypto, to Bitcoin, they don't care. 20% yields make you wake up.
Yeah, and so when you start to think about that macro environment, like this, I'm fascinated by the fact that we now have persistent inflation. We've got a ton of assets that either have negative real rates of return or very, very atrocious real rates of return. More and more people are looking for somewhere to store their value, to protect their purchasing power, or to have it appreciate. Bitcoin becomes this attractive asset. Now we've got the futures ETF that appears to be likely, that is going to really open up access to get exposure. And so all of that leads to this push in demand. Supply, 85% of it is illiquid over the last 90 days. Do you think that this is just like pure rocket fuel for Bitcoin, and we're likely to see kind of what we saw in October, November of last year, where there was like a 500-600% increase? Or just because the asset is bigger now, we're not likely to see that level of volatility or that kind of severity of a move?
I think it's definitely possible. Like Bitcoin trades reflexively. So in a bull market, like you'll kind of see like this, consolidation or accumulation periods where like last summer Bitcoin did nothing for months on end while all this the stock market and everything else was ripping, and then all of a sudden it goes parabolic, right? That's kind of what on chain is like. That's why it's so valuable. Is you can see under the surface there's a massive accumulation occurring, which is happening today. And so like all-time high amount of supply that hasn't moved in 90 days. Long-term holder supply at all-time highs, quantified a little differently, but same thing. It's just we have this supply squeeze going on. And so when something like a futures ETF comes in, and even though they're not buying spot Bitcoin, what it's doing is if there's a large inflow into these Bitcoin futures contracts, what it's going to do is it's going to hike up that basis. It's going to raise the futures price. And what that's going to do is it's going to incentivize capital to come in and capture that, that spread, that arbitrage. And so a lot of people like there's a lot of Wall Street that didn't care about Bitcoin at all, but they bought GBTC earlier in the year. They went to Grayscale with massive amounts of money because there was a huge premium and they just wanted to capture the yield. So Grayscale bought up 500,000 Bitcoin because there was this huge spread and Wall Street didn't care and pummeled money into it. And so I kind of view the futures ETF in a similar sort of light, in the sense that, itself, like the futures ETF, it might not be that bullish for the spot price, but what it does is it incentivizes people to come in, sell the futures and buy the spot. And so that's, the second order effect there is actually pretty powerful. And I think it could be a pretty big catalyst, if not just for narrative alone.
Got it. And so when you think about this last chart that you've got here is the HBIT Senior Index. What the hell is this? Where are you finding this?
Yeah, this is I forget his last name. One of the Bloomberg ETF guys, James, he's been on top of this. He's a great follow in terms of just staying on top of this stuff. But basically, this is over the last year. This is the spot price of Bitcoin, and then this is like the rolling futures. If they had this sort of product, which wasn't on the market, but this is the last year-over-year performance. And basically, what you see is that the futures ETF underperformed the just spot Bitcoin by 35% because of there's this contango, right? When futures are trading above spot price, you have to roll these futures contracts over. And so if you're constantly buying above spot price and then selling that contract the next month and buying above spot price, because for the mostly Bitcoin futures trade in contango, they trade above spot. You're just kind of bleeding money against Bitcoin. So like you buy the futures ETF and like Bitcoin rips and you're gonna do all right. Like you're gonna do very well actually, but you're gonna underperform Bitcoin over a sustained period of time, which is why I at the start said I would never buy this, because essentially you're just kind of transferring some of your money to the people that are going to come arb you. They're going to arbitrage the spread down, and you're just going to kind of bleed out money compared to just spot.
Got it. And so when you start to think about the this futures issue, is this mostly institutions that are going to come in and buy it, or are these actually individual like retail investors that are going to go try to buy this thing?
Yeah, I think in general it's just good for the legitimacy of Bitcoin and in the eyes of people that have been skeptics for a decade, right? Like you're gonna have a lot of capital that's just sitting in bond tranches and these macro funds, and they've ignored Bitcoin and they've laughed and they called it speculative. And now all of a sudden there's an ETF that's approved by the SEC. They're saying Bitcoin's here to stay. You have Jerome Powell last week. We're not going to ban it, even though they have no jurisdiction to ban it. All these things, it's just like, checking off like the FUD boxes, like, oh, China ban, like check off the box. Bitcoin ETF, even if it's futures, check off the box. And so, now there's a huge way to just kind of like an easy way for people to allocate capital. Like Grayscale is a trust, MicroStrategy is a stock that, that's levered. There's equity risk there. Well, a futures ETF, like, if I want to, buy this during some sort of macro risk off, or if I want to buy it as an inflation hedge, maybe I'm not going to hold this for a year, but there's literally trillions of dollars of capital that now has, very easy access to Bitcoin, its performance. So in that sense, I think it's very bullish. And I think it's leading a spot ETF that will probably come in 2022.
Yeah. And so what is your thought process about this bull market that we're going into right now in terms of what is your price prediction for the end of the year, or how high do you think that we can go in the bull market?
Yeah, tough question. I love it. I'm wearing the 100K hat. I think that comes fast, honestly. Once all-time high breaks, like people kind of gawk at big numbers, but again, like you have to look at Bitcoin in the log chart for a reason. And when we break these all-time highs, I think it's going to be similar to kind of the price action we saw after 20K broke. We flirted with 19, 20K for a little bit, and then a month after the all-time high broke, we were at 40,000. So I think, I mean, maybe that doesn't repeat exactly, but it's going to trade, and it's going to trade very, very reflexively. It's going to go parabolic, and a lot of people, are going to kind of, it's going to melt faces. And so you're going to have a lot of capital, flooding into this asset, and you're going to have not a lot of people selling, especially early on. So, I think we're at, six figures or close to it by the end of the year. And I'm pretty confident that it's not just, going to stop there. Bitcoin is here to stay.
I completely agree. Do you think that the bull market runs through the end of the year, or do you think it'll actually extend into like Q1, Q2 of next year?
Yeah, I think what a lot of people are, when you're comparing it to 2017, just like the cycle by cycle thing or by halvings, what people don't really understand is we kind of had a full bear market condensed into like 3 months. So we had, we had massive derivative liquidations. Everybody that was leveraged, even like, people are saying, oh, Bitcoin never goes down 50% in a bull market. I'll just 2x long. Everyone was wiped out. You had a massive miner capitulation kind of engineered politically by China. You had a huge like puke up of spot coins that you can literally see on chain that were already accumulated. So we kind of had like, this traditional like 3-year bear market that we always have, like, or that Bitcoin's had, a few times. We just saw that in like a pretty condensed amount of time. So I think, in that sense, it's super bullish in that we kind of just like charged back up to run it back. So that's why I'm like, hey, like, we might not top here in 90 days, and it might, this cycle might not be so much of a traditional 4-year cycle, and it might, continue to just run on as Bitcoin is, now it's here to stay. Like all these FUD like boxes that I was saying were checked off. Well, everybody in the world's looking at this thing. You have presidents tweeting about buying the dip. Like we're in somewhat of a new paradigm here. And I hate saying this time is different, but in the sense of Bitcoin's not going to go down 80% and die for 3 years, I'm very confident in that. So I think the tradition of a 4-year cycle, like Will said earlier, I think that might go away.
Got it. And so one of the things that, if we come back to this Bitcoin futures ETF, I think I saw Raoul Paul, who was tweeting. He was basically saying this idea of issuing a Bitcoin futures ETF. It's a good step, but basically handing hedge funds a massive arbitrage opportunity, as the futures will trade at a large premium in bull phases, and then the hedge funds will get to capture those returns. And so he's saying that it's an old financial market trick. You now have to add multiple new intermediaries who all make profits: the ETF provider, the clearinghouse, futures broker, administrator, auditor, law firm, CME, and hedge fund ARBs. Wall Street gets richer, retail investors lose again. Like, is that your general read on how this futures ETF will kind of come into the market and play?
Yeah, I mean, more or less, I think a little less, maybe not harsh, but just, I think in general, like a Bitcoin futures ETF is better than sitting on zero or sitting on nothing, sitting on no exposure. Like, you should hold your own keys. You should buy spot Bitcoin, and you should self custody. You should do all the, best practices for being a Bitcoin holder. But, if you're sitting in some, if you're like a legacy asset manager and you couldn't have any exposure before, well, this isn't a bad first step. So it is true that, you're gonna underperform spot Bitcoin just because of, the 1% annual fee, or I think it's like 90 basis points. And this, kind of contango that you're going to bleed up against because you have to roll this thing over, like we kind of covered. It is true that people are going to come arb this, but that's good because, that ultimately attracts more capital. And I think, maybe not in terms of the CME, but when you're talking about physically settled futures contracts, which means, Bitcoin has to be delivered at a certain date. If I sell a futures contract, I'm promising to deliver that Bitcoin. I think over time, the most bullish thing is we now have a fair cost of capital in the market. So interest rates everywhere are manipulated. Global central banks are going crazy. Rates are negative. They're letting inflation run hot and keeping yields basically pinned at zero. So everybody that's basically like the cost of capital is negative, which doesn't make any sense. But now with Bitcoin, you have this global, neutral, apolitical, sovereign asset, hard capped. Nobody can manipulate it, and now you have this free market for the future. You have like basically a cost of capital that's free and open. And so CME, yes, it's paper traded. You can't put up Bitcoin as collateral. These things are kinks that I think will be fixed over time, and I think we will get a physically settled futures market in the U.S. But ultimately, that's, the beauty of Bitcoin is now we have a free and open market for money that no one can manipulate. And so, if CME, if there's some sort of manipulation like the gold bugs say, you'll see that in the difference between, say, Deribit or FTX or something with a real Bitcoin futures market with Bitcoin, delivery versus, cash CME. So that's the most bullish aspect. The maturation of this asset class is something that's happening gradually then suddenly. And so, these things, even if it's not perfect, are broadly very bullish.
Joe, John, what questions you guys got?
Dylan, nice to meet you, man. I got some heat because I wasn't on the show the last time you came here. So nice to meet you.
Nice to meet you, man.
My question.
Great follow.
Thanks. I appreciate that. My question would be like, what's the biggest bull case you can think of this year, right? Like we've had some people on the show that have said, numbers that I don't know if everyone would agree with, but they've approached $400,000, $500,000, $600,000, by the end of this cycle, kind of at the end of Q1 or sometime next year. Like if everything goes right, and in your mind, what are those things, right? Like I think, other nation states adopting it as legal tender, whatever you want to call it. But like, what's your biggest bull case?
Yeah, I mean, it would probably be another kind of like Michael Saylor out of nowhere, where you just have someone that's like, all right, I'm calling the bluff. I'm borrowing $10 billion at 2%. And because I'm this mega corp and we're just stacking Bitcoin, or like, they've announced that, hey, we acquired 75,000 Bitcoin under the surface while no one was paying attention. Something like that, where, kind of MicroStrategy came out of nowhere last August. I think that could potentially happen again. I mean, I know for a fact that a lot of like funds and like so-called like smart money that was very excited about Bitcoin at 60K definitely filled their bags at 30, 40, 50. But a public corporation or some kind of macro fund with a like, say, Bridgewater comes out with a huge position, Ray Dalio's fund, like a $40 billion fund. If they said, hey, we got a big Bitcoin position, something like that could really ignite the mania. And then price targets, it's impossible to time tops. I'm just DCAs, and hodling for the most part. I have some option plays because I do think that we're going to see some fun numbers, but in terms of timing the top, it's near impossible. But yeah, corporate adoption, sovereign adoption, another country, like a big country saying, hey, Bitcoin's legal tender. These things are just stepping stones.
And I would have one other question too. Off of we talk about the FOMO stage a lot, right? Of like everyone's talking about it, and usually we gauge that on your barber's talking about it, asking questions, the taxi driver's asking questions. Like from someone who studies on-chain metrics, kind of all the time, like is there a better way to determine that FOMO stage?
Yeah, we're not there. That's the awesome part. Like we're basically seeing, like I talk with Will all the time, and it's like, dude, we're seeing bull market price action, and the on-chain stuff looks like we're in this consolidation or like bear market phase, in the sense that like you see these like things like long-term holder spikes and the massive accumulation during like the bear market, during like the early months of 2020 after the COVID kind of liquidation. We saw just like massive accumulation, and that's what we're seeing again. And we're like a few $1,000s from all-time highs. So that's the crazy part, is that we're not seeing this massive profit taking. We're not seeing toppy sort of things. It's like it fully looks like we're about to run it back, and that the mania phase hasn't started at all from the on-chain side. So even though it's about to get crazy from a price perspective, the underlying like on-chain metrics say this thing hasn't even started.
John,
what's up, Dylan?
Congrats.
Dill. Sorry. Congrats on passing 55K followers on Twitter. You're now above me, but we won't talk about that. On your way. So I'm curious, has anything surprised you in the last few weeks that you've been looking at this stuff, like the aggressiveness and the conviction of the long-term holders? Like, what has anything surprised you when you've been looking at the data?
I mean, not really, in the sense that I guess maybe just the price action. Like we've really run it back pretty fast. We've been saying like accumulation's happening. It's once this thing kind of snaps, it'll go crazy. But I've been very pleasantly surprised with just kind of the pace of this Bitcoin price action, and it looks pretty sustainable. It's not like we're overheated. The derivative markets look fine. Like the macro kind of risk off we've had, not like risk off, but the decorrelation with equities and other sort of traditional assets is something that I was very pleasantly surprised with. And you just look at the chart, and it's pure vertical accumulation for Bitcoin, while equities have sold off a couple of percentage points over the last month and have lost momentum. And those have been seemingly melting up since March of 2020. So that's the most bullish side of things. And I think when you're a risk manager, all these guys, managing trillions of dollars of assets combined, they're all looking at their screen and they see a sea full of red and they see Bitcoin up 8%. I mean, that's meaningful. And so, like for me, or like for the convicted Bitcoin holder or a maximalist, correlations and all that stuff don't matter. But for someone that's like managing these huge pools of capital, that just a few basis points, just a couple percent allocation is going to send Bitcoin, they're looking at this and saying, I need more exposure, or I need to get off zero. So, that's probably the most surprising thing for me, pleasantly surprised.
Cool.
Dylan, give us a quick update on your friends. We've talked to Will a million times about like his friends in college and stuff. What are your friends saying about it right now? Are they all FOMOing and really excited about Bitcoin? Do they not care? Are they not paying attention? What is the general kind of conversation?
Yeah, I live with a couple of my friends who are all, they're holding Bitcoin, and some of them are like very, very orange pilled, but I'm definitely known as the Bitcoin guy. So, go out to the bars and be like, oh, how's Bitcoin? And it's like, I've already talked about it for 10 hours a day. So it's, it's good. I mean, I think everybody is, some are paying attention. I've convinced a lot of people to get off zero, but I think, for the most part, the texts and calls and all that haven't started to flow in. So it seems like we're still in the early phase of this.
And then what about your mom? Your mom's on Twitter, and I saw that you've orange pilled her as well.
Yeah, she is very orange pilled. She'll be pumped for the shout out there. Yeah, she's lurking on Twitter because I would always update her about my day or what's happening, and she wouldn't know what's going on. So I just showed her how to use Twitter, and she's probably on it as much as I am, which is quite funny. So I mean, it's awesome to be winning with the fam.
Yeah, for sure. All right. So what is your thought process in terms of the Bitcoin miners, these publicly traded companies? It looks like more and more of them are coming into the public market. We know that a lot of the hash rate has shifted into the United States and Texas specifically. And so Bitcoin continues to appreciate, let's say through the end of the year into beginning of next year. We're at 60,000 today. We think six figures of Bitcoin price, you and I both. The miners obviously will do very well because they have Bitcoin on the balance sheet. Their revenue is going to go up because they're mining an asset that continues to increase in price. Do we feel like institutions are going to come in and they're going to start buying Bitcoin and also start buying those mining stocks, and it pushes those higher as well? Or how do you think about the relationship between like the publicly traded stocks to the actual asset itself?
Yeah, so I think honestly, like during the the mania part of the bull market, or just during the bull market in general, these miners will rip, and I think that's just very bullish. Like I own a tiny position, just like a speculative kind of play, but I think when you're looking at like a valuation for miners, if you're looking at it in dollar terms, right, like these are very attractive businesses. Their balance sheets are going to explode, but if you're looking at it in like a Bitcoin kind of lens, I think. For the most part, because there's this super high kind of multiple in equity markets in general, right? It's all stemming from this manipulated cost of capital. I think it's going to be very hard for these miners to outperform Bitcoin over the long term. But the most bullish aspect is that when you have all of these mining companies IPOing, they're getting access to the public cost of capital in these public markets, and so Hut can go out and borrow at basically no cost because they're collateralized with Bitcoin. I think Marathon is teaming up with Silvergate, and they're a Fed member bank, and so they have a $100 million line of credit, and Silvergate's a Fed member bank, so they have access to like basically a zero cost of capital, and it's a like Bitcoin collateralized lending is a no loss business. So every bank's going to get in, and all these Bitcoin miners are not selling really any of their supply. So that's the bullish thing. Like in the early days, you had to sell to cover your electricity costs, capex, opex, but now they don't have to do that because of this access to public markets, which is really bullish for price. So I mean, I expect these Bitcoin miners to rip, but I think over the long term, it's going to be very, very challenging to just outperform the Bitcoin, the asset itself, when you're considering tax implications and all of that.
Yeah, the other piece of this that's fascinating to me is most of the miners have been miners, right? They only stay in the mining business. We've seen companies like MicroStrategy, Tesla, Square go ahead and put Bitcoin on the balance sheet. But the only company that I'm aware of that's publicly traded that has Bitcoin on the balance sheet and is not doing exclusively mining is Square, who's going after some of these other types of financial services or software related components of Bitcoin. It feels like that's kind of a greenfield opportunity. Like there's a ton of people who could really go in and say, hey, look, we're going to be a Bitcoin company. We're going to be publicly traded, but we're not just going to be in the mining business. We also want to get into whether it's building consumer apps, enterprise software, kind of all these other features. That seems like no one's kind of become the leader in that area.
Yeah, I mean, that's coming. I think like the Bitcoin standard is, it's a gradually then suddenly type thing. You're going to see a lot of, MicroStrategy type things later on. I think Michael Saylor was extremely bold, and you have to commend him for being a leader and a pioneer in that sense in the public markets. But you're going to see kind of a lot of people like do what Square did and just dip their toe in. I think Coinbase is taking 10% of all their revenue, and they're allocating to crypto assets more broadly, but they're allocating to whatever the users hold. So that's about 50% Bitcoin on their platform. So 5% of Coinbase's revenue is just auto stacking Bitcoin now. And so, for any Bitcoin company, that makes complete sense. And I know like most, private companies that aren't publicly traded, they're already doing this. But I think it'll just, for any company really, like especially oil and gas, who I suspect to get into Bitcoin mining, in the coming years, it's already happening under the surface. Expect Bitcoin on the balance sheets, especially if this accounting standards change, which currently they're not too favorable. But I think, a lot of these things will take time, but they'll get it all worked out.
Absolutely. Are you changing anything you're doing as we go up, or are you just continuing to stack sats, put it in kind of cold storage and chill?
Yeah, I mean, for the most part, I think it's very tough to time tops, and especially when you're factoring in capital gains and all that. So, I mean, yeah, I'm just continuing to stack, and my kind of plan for this last year and a half, and through the next decade is anytime I think Bitcoin's fallen far too much and is really cheap, I'll take on a little bit of leverage and ride the wave back up. But in terms of selling, why would, like Michael Saylor would say, if you're in Venezuela, you're gonna take some profits off the table with your dollars to enter the Bolivar? Like, no, it's not. It's going up forever. So, that's my strategy, and I'm pretty happy and content with that.
Yeah, I tend to think that that's a pretty good thing. Anything else from you two geniuses?
From the Peanut Gallery?
Yeah, the Peanut Gallery.
No.
Hey, Dylan, you want to join their union? They got a union against me. You want to join?
Yeah, I'm in.
Nice. You didn't even have to hear the sales pitch. I like that.
But now I get credit, so I get also benefits.
No, you don't. We get Dylan. We're about 15 to 20 strong so far. We're recruiting. If you know
growing
anyone
by
else.
the minute as well.
Yeah.
By the way, Dylan, you're probably too young. You've never seen a union. This is an exact lie that a union would tell, that they have 15 to 20 people and they have 2.
No. Whoa. Let's clarify. I think that was I underpromised there. Yeah, that was a lowball number. I think we're probably higher than that by now.
Just wait till we
report. Pay dues can be paid in Bitcoin to us.
You're not getting my sats.
You guys ain't tricking anybody on this show. All right, man. Listen, where can we send people to find you on the internet?
Yeah, you can find me at Dylan Leclair _. I do the deep dive with Bitcoin Magazine, so we put together a daily newsletter. And we just we're transferring to Substack, which I'm pretty excited for. So you can just, next to that subscribe thing at the bottom of my profile, you can check that out. We cover a lot of the stuff I talked about today, and the on-chain stuff, derivatives, all that. So we try to keep on the edge of these things. So you can find me there. I appreciate you having me on.
Awesome, man. Well, thank you so much for doing this. I just dropped your Twitter link in the chat here. Everyone, make sure you go follow Dylan. He's at 55,000 followers. He's above John. Will crossover Joe. I mean, Dylan and Will are
they're coming in hot.
They're
Dylan's going to be on my tail soon.
They're smoking, both of you.
Bitcoin goes to 250, and Dylan's going to be right on my ass.
I don't think he'll mind that at all. So it's all good, man. Thank you so much for coming on, and we'll do it again.
Well, appreciate you, man.
Yeah.
See you guys.
Later, buddy.